If you buy designer clothes, go on extravagant holidays abroad and pay for luxury services, the government is on to you. As a way to find tax evaders and broaden the tax base, the Central Board of Direct Taxes, CBDT, is looking to tighten the noose on high-paying individuals or people who buy a lot of luxury goods and products and services. Remember, the aim is to widen the taxpayer base by 10% from 77 million to about 86 million in financial year 24. Now, reports suggest that a central action plan is in the works on tax broadening measures such as tightening the organized collection of data from various agencies and third parties and proper checks on statements on tax deducted at source and tax collected at source. So, if you are evading tax and are found to be spending too much on luxury services, you are likely to be caught. Joining me at this point in time is Shrimi Choudhary, who's the senior editor, Business Standard, broke that story today. Also with me, Amit Singhania, who's a tax expert. Coming to you first, Shrimi, it appears that government is finding new innovative ways of finding tax evaders. Shrimi is not with us. Kartik continues to be with us in the newsroom. Kartik, same question. Looks like new innovative ways of finding tax evaders. This time, looking at your purchases, perhaps going a little too deep into what you're spending.
Not really, Shweta. If you recall, any spend in excess of 49,999 rupees, 50,000 and above, was in any case always mandated to go along with your PAN number.
Okay.
So even if you went and you made a purchase at a jeweler, swiping your card, I'm not talking about the cash economy, and I believe for the larger sake of the country that India has truly become cashless and is moving in the right direction to become cashless. But any high value purchase that you did in the past, whether you bought a car, whether you bought an air ticket, whether you went to a jeweler and bought some gold, anytime you spent more than 50,000 rupees, you were asked to give your PAN number. Okay. In fact, even in banks, if you deposited a check which was valued at 50,000 or more, you had to fill in your PAN number. So I have a feeling that yes, this has been in the works for a while, but now with the linkages with, let's say, Aadhaar coming in, with linkages overall using technology in the economy, it now becomes a lot easier to identify and find a grid of all the transactions made by an individual in a financial year, because your PAN and your Aadhaar is linked.
Okay.
You've gone to a hotel, you've stayed in a hotel, that hotel has a certain room night, you've given your Aadhaar as your identification to check into the hotel. It's easy for the government now, using technology, using the India stack, to connect the dots and really arrive at individuals who are spending money in exuberance, okay, and correlate that with their tax filing.
Okay.
So if you're spending 10 lakh rupees in a year, but you're filing tax for, let's say, even 12 lakh rupees or 15 lakh rupees, it's difficult for you to actually spend 10 lakh rupees on an income of about 15 or a declaration of about 15 lakhs.
Okay.
So I think the linkages will become easier using technology.
Okay. So if it's already happening, then there is no point of making it tighter, because you're already getting all the information. And just before the show, we were discussing as to how even my bank account is linked to my PAN number. The moment I make a transaction,
yeah,
the money is debited,
yeah,
that in itself registers in my statement, and therefore it's relatively easy for government to trace that money back to me.
With your bank account, yes. Using your own debit card, your own credit card, yes. But the point is, you go and you buy a piece of jewelry using money that does not get debited from your account. You've used somebody else's card, you've used somebody else's cash, you've used something else. You still need to give your PAN details along with it. So that now becomes easier to track, is my understanding of how this is going to function. At the cusp of technology, at the cusp of data science, at the cusp of using all this, collating all this, and really arriving at high spenders rather than high earners, and which is where the difference really is.
Okay, Amit is getting through, but before I go to Amit, I want to, one last question. Most of these transactions, and you rightly mentioned, when it happens in cash, it becomes very, very difficult to trace where the money is coming from. Unfortunately, whether we like it or not, most of our economy is still informal, which means there's a lot of cash transaction. If I'm going to buy something, and if it's a luxury product, if it's 1 lakh, 2 lakh, not everybody, and for that matter, gold.
Yeah.
If you go to a small jeweler, they're still ready to accept that cash, and that cash is unaccounted for. So therefore, you fall off the privy of tax net.
Very true. But thankfully, the news is tightening on GST and on acceptance of cash, depositing of cash. I understand, I feel the jewelry economy, the jewelers are still, whatever we may like to believe and see in numbers or not, would still be running on cash. And it's very, very difficult to change that entire process of getting them to not accept cash. So that's definitely a very, very difficult spot to be in. But if you were to book, let's say, a travel, if you were to buy a new iPhone, if you were to go to a mall and a formal area of transaction and try and offer cash, a lot of players today are skeptical of receiving that cash.
Okay.
So that fact remains. Of course, the jewelry market and the overall cash transactions in the informal economy will continue to be hard to track.
Absolutely.
But hopefully with penetration of UPI and overall the dominance of cash going down, hopefully that should get solved as well.
Okay. Amit is with us. Amit, I think it's a state question. When it's payment made through cash, absolutely no way of tracking it back to you. But as Kartik pointed out, more and more money is now being paid through digital ways, be it UPI, debit card, credit card, and therefore that becomes relatively easy to track back. My bigger question is, most of these transactions that happen, if it's outside a mall, outside a big facility or a big service, if it's a small jeweler in a tier 2, tier 3 state or a city, they still are likely to transact in cash, in which case you cannot really identify them.
Yes, yes. So if you are doing a transaction at a small trader or at a small shop, which is not required to report its sales turnover, and probably that particular trader or a shopkeeper is also not filing the income tax return, then yes, currently also it is not possible to trace back that particular cash. So that kind of lacuna is still there. Look, but if you see right from 2014 onwards, I would say rather 2012 to the period prior to 2012, and after when the GST has enacted, you will see a significant drop into the cash transaction. Look, that's a very good aspiration to achieve a 100% cashless economy, but it's not practically possible to achieve it. We are closer to a cashless economy, but still these kind of lacunas still exist into the system.
Mm-hmm. Okay. Shrimi, who is the senior editor at Business Standard, who broke that story, will be with us very, very shortly. But before we go to Shrimi, Amit, we understand that these are new innovative measures that the government is taking to broaden the tax net. How effective are they? How effective have they been when tax base in this country is concerned? What sort of expansion have we seen in this year and last year?
So look, in this particular year or in this particular budget also, we have seen certain measures have been taken to expand the tax base. We are not very sure whether these particular measures are going to give the desired result. For example, if you see, there is a TCS which has already been introduced for the purpose of any kind of a payment made outside of India. The TCS rate has been increased to 20%. But I would not say this is a tax widening measure, because once the transaction is happening and the money is remitted outside of India, it is through the banking channels only. So that particular money is already into the system. It's only the tax collection which has increased, or rather which will increase from these measures. But if you see the other measures, for example, when you purchase a house property by selling of another house property, now the cap has been made to 10 CR. And that's also once in a lifetime opportunity for Section 54, one can avail it. So real estate is one of the mechanism where the cash transaction still happens, and the government is trying to curb the availment of the exemption by the HNIs. So these are the measures which may give you the desired result in a very long period of time. But whether these measures are going to get into a trapping of the small taxpayer, to my mind, answer is still no. Small taxpayer is still outside the net, and with these kind of measures, small taxpayer may not even come to a net. For the purpose of getting the small taxpayers into the net, or the small individuals who are not making payment of any kind of a taxes, although they are liable to make a payment of taxes, I think the tax department needs to use more of AI tools more of the information database, try to
Okay.
collect more and more information, and try to use that database to catch those tax evaders.
Okay. Shrimi is joining us at this point in time. Before we go back to Amit, Shrimi, congratulations on breaking that story. You've talked about a central action plan that CBDT is working on. Could you perhaps share some details with us?
Yeah, sure. As we reported today in our paper in Business Standard, CBDT, which is an apex body for direct taxation matter in our country, it prepares a central action plan every financial year. So, where they decide the strategy, how to go about it, how to widen and deepen the tax base, and accordingly, tax department take reference from that center action plan and act on it. So this time around, for FY24, they wanted to, so they're aiming to increase tax base by at least 10%. So if you see the official data of FY23, the total number of returns which have been filed is around 7.8 crores. So now for FY24, they sort of aiming at that they should increase it to at least 10%, which comes around 8.5 crores. So that's the target. Now, how to achieve that target? So they have highlighted, certain strategies, certain loopholes, and they want to sort of plug those leakages where they think that information gap is there. So, for example, they're saying that SFT, which is specified financial transaction. So there are certain reporting entities which supposed to report and file statement of SFT if there is a transactions exceeding the threshold limit of what that is prescribed in the direct taxation laws. So what is happening is in certain areas, for example, IVF clinics, people go to IVF clinic for availing services, hotels, banquet hall, luxury brand retailers. So those transactions when people take services or purchase goods and high value goods actually, that information of transaction is not coming to the tax department. So what they are saying is that ensure and have a verification mechanism where you ensure that you getting all those information. So all those reporting entities which are mandatory to give those statement should report to them. Now, interesting point is, if you see the reporting entities, I'm talking about banks, post office, all almost all the financial institution, including stock exchanges, they are supposed to file this SFT. Uh, Even SSC is supposed to file if they are, purchasing a high value good. So if I am going to have a cash transaction in a certain store, maybe I'm buying some luxury brand stuff, I'm supposed to report that. And if I'm not doing that, I will be held as non-compliant to SFT, and I may be penalized for that if they sort of found that later in my tax filing. Similarly, uh, they want Bureau of Immigration to give all the report in a very efficient manner in terms of foreign travels, especially if your stay is 10 days or above. So they want that they should get data from Bureau of Immigration. Anyway, they are supposed to file that statement where they give the amount if they are exceeding 2 lakhs and above. But even if they are not giving it, it's on the tax department that they should get those data and match it with the tax return, that whether these taxpayers are paying the sufficient tax which they are supposed to, and if not, then they should come under the tax net. So even the other expenses like electricity bill. So of
I
course,
was about
again,
to come to that, Shrimi. What comes under the ambit of extravagant payment? From what you've written, it says your visit to fertility clinics, a high electricity bill, including if you're going, of course, on a holiday, you're buying a luxury good, a bag, a dress, all of that and more.
Yeah. So these are the areas where SFT is that's what I was mentioning, that reporting entities like all the financial institutions supposed to file that statement. Even SSC, like me and you, if we are purchasing some high value item, like for example, luxury brand purse, if we are purchasing, we supposed to file that statement with the tax department. So a lot of people who are not under the tax net maybe not filing the tax return, but getting indulged in high value transaction, they're supposed to file it, and that's how they're able to know that, okay, this is the person, this is the source of income, and they will actually match that with your tax return if you are filing. And if you're not filing, they will ask you, send you notice that, you're supposed to pay tax on it.
Are these
So
mutually exclusive, Shrimi? Does this mean that only those who are not yet filing the tax return, but indulging in these extravagant expenses need to report, or even those citizens like us who continue to file our taxes year on year, and from the salaries that we draw on which we file our taxes, but we do end up indulging in, let's say, an overseas travel, is it becoming applicable for us also, in addition to our tax return, to mention these SFTs?
see, SFT as a concept, if you remember, earlier there was a concept of AIS, Annual Information System, which they actually, renamed it to SFT. So there are two aspects to it. Of course, one about the financial institution who's supposed to report, and second, SFT itself supposed to report that. So me and you is already, see, we are salaried class people. So of course, our TDS has been cut, and they know that we are the taxpayers.
Yeah.
So idea here is to, identify the potential taxpayers who are not filing the return, because see, the ultimate goal is to increase the tax base here. Of course, deepening the tax base is also one point,
Yeah.
but they are more focusing on, getting more taxpayers into the system, getting more people into the system. And that's why they are saying that a lot of people are non-compliant, where they are not reporting such transaction which exceeding the threshold limit prescribed by the income tax laws.
So largely, are we now looking at getting perhaps non-earning dependents of tax-paying citizens as part of the larger tax net? So would, let's say, would a child going to college purchasing a high value item like maybe a designer purse, for which the payment has been made by the mother or the father who are earning and tax paying citizens, but the name that goes on the invoice is of the child, does that sort of, now is that the definition of widening the tax net in this way? Because I presume anybody who is indulging in these luxurious adventures knows for a fact that at the end of the day, you're not paying for these items in cash. You book a ticket, you're not, no travel agent today is accepting, I mean, hopefully accepting a cash payment. No luxury brand, you walk into a retail store, will accept, cash without really taking your PAN number. So is widening the tax net here really a numbers game, or is there actual tax evasion that will also likely get curbed and curtailed with this measure?
So, of course, tax evasion is always the point which they, try to sort of, fix that because they suspect that there are transactions happening in cash, especially when you go to such clinics, banquet hall for marriages, etc., for any party function. Lot of transactions still happening in cash. So what they are trying to curb is, if you are doing that, please report to us that
Right.
we are getting into that transaction. Now,
Right.
if you are asking that a child purchasing a huge sort of item, so of course they are not going to, they are just matching it. Remember, it's an internal central action plan. It's not for,
Right.
it's not for the public domain that you and me should know that what is going on and how they are doing the analysis. They will, of course, match it to the income. They will do the whole profiling of that, kid who is purchasing such high value item, and then only they will perhaps send notice and ask you
Okay.
that how, purchasing that and what's your source of income.
Okay.
The second important point I want to highlight quickly here is that TDS credit is also very important, because if you remember from last 2 years, we have been seeing a lot of tightening in terms of new age sectors like cryptocurrency and
Yeah.
online gaming. So the entities who are running these, they have these TDS credit available, even that they are not filing the tax return somewhere, and that's the observation they had. So they are also saying that we should keep a close watch on them, that whether TDS, they are deducting the TDS or not, ensuring that whatever the tightening they came out with in last 2 years in terms of cryptocurrency, for cryptocurrency exchanges
Okay.
and even famous, they should file the tax
Right.
return.